Now, according to Raimondo, semiconductor firms are afraid to invest in the United States. Why? Because Chinese vendors offer their chips for 30% to 50% less than U.S. sources. And this is Beijing's supply chain advantage. They have cheaper energy and control over mineral inputs. Producing in China and delivering all the way to the United States is still cheaper. So we can view the playbook. Terrorists equipped with Chinese legacy chips are on their way. Maybe it is 50%. Maybe it's 100%. Maybe it's 200%. It's the only alternative the U.S. has if Trump wants to reshoe manufacturing at home. However, this will result in a market divide between nations that have access to low-cost semiconductors and others that impose tariffs on Chinese imports. By 2030, electronics would account for half of a car's overall cost. Furthermore, EVs have at least 3,000 semiconductors, including mass-produced chips. Americans will pay more for autos. The chips will undoubtedly be created in the United States, but domestic pricing will almost certainly be higher, while other countries, including those in Asia, will pay less. And this, ladies and gentlemen, will be the direct cause of a tariff war. Two different markets. One for countries that continue to trade with China, and one for the U.S. market, which is becoming more isolationist. A shift in global commerce is only the beginning. When China deals less with the United States, something clear will happen. Chinese merchants will deal less in dollars, reducing China's need to keep dollar reserves, which should serve as a major wake-up call. China's holdings of U.S. bonds have once again fallen to a new low. They currently own only $760 billion in U.S. debt, a $37 billion drop despite rising bond prices. So China is either letting its assets mature and roll off, or actively selling. This figure is likely to fall much lower in the future. This poses a significant challenge to the U.S. economy in the future. Reshoring is a very costly undertaking. Let us recollect what happened just a week ago. While the Federal Reserve reduced interest rates, Power has indicated that there would be fewer cuts in 2025. So we could only receive 1 or 2 cuts next year. The Trump administration will issue bonds while borrowing prices remain extremely high. Yes, there will always be demand in the Western world. G7 nations will remain net purchasers. However, if China boosts bilateral trade with the BRICS, global demand will fall more. Something strange is going on with the Treasury yield curve. The blue curve depicts yields in September. The 2-year yield was 3.6%. The 10-year yield was likewise at 3.6%, but yields have begun to rise along the longer end of the curve. The 10-year bond currently yields more than 4.5%. The 10-year is the baseline for all other borrowing rates in the United States. As a result, corporations are still subjected to rising interest rates. Foreign purchasers for U.S. Treasuries are significant. It'll be intriguing to observe how Trump will boost demand. Threatening tariffs will not work since it limits commerce and hence the flow of funds. Beijing has also begun to issue its own dollar-denominated bonds. Their demand is virtually comparable to that of the United States, and this will complicate Washington's financial strategy. If the Chinese continue to borrow dollars from throughout the world, yields will rise immediately across the board. Buyers will seek a greater return, and things continue to become stranger. Chinese investors are increasingly buying dollar bonds issued by the Chinese government.